Hey, what's up, my friend? So in this video, I want to share with you why Fibonacci trading doesn't work for me. Okay? So first up, right, let's understand what is Fibonacci numbers all about. So it pretty much originated, some say it's from India, right? And then brought towards outside of India. It first appeared in the book called the Liber Abaci. I hope I pronounced that correctly. And it's written by Fibonacci. So I guess that's where we got the term Fibonacci numbers from, right? The word Fibonacci. So what this means is pretty much the numbers goes in this sequence, all right? 0, you can see 0 followed by 1, 1, 2, 3, 5, 8, 13. So to the naked eye, this doesn't really make much of a sense. So just to explain to you why this is the case, right? It's because, right, if you take the first number and add it to the second number, right, your third number is simply the addition of the first two numbers. So 0 plus 1 is equals to 1. Alright, if you look at this, 13 plus 21 gives you 34. 144 plus 233 gives you 377. So you're just pretty much adding the first two numbers, and the third number is just the addition of the first two numbers. So this is how, or rather this is what we call the Fibonacci numbers, Fibonacci sequence. So what about Fibonacci ratios? How do we get these ratios? So again, it's very simple. You take the first number and divide it by the number to the right, the first number to the right. So in this case, let's say you take 13, divide by 21, you're going to get a number very close to 618. If you take 13, divide by 34, which is the second number to the right, you're going to get a number very close to 0.382. And if you take 13, divide by the third number to the right, which is 55, you're going to get a number very close to 0.236. Pause this video, do it for yourself, and you'll see what I mean. And it doesn't mean that you have to start from 13. You can start from, let's say, 144. It's the same. 144 divided by 233, you're going to get a number that is close to 0.618. Do it yourself and you'll see that it's true. That's why they call it, that's why people are, so fascinated by Fibonacci. So one thing to note is that Fibonacci is all around us. You can see it in the flower petals, the way it's grown, right? In even the way rabbits give birth, there's a Fibonacci sequence to it. The way the leaves are grown, even your face, right? Studies have shown that people who are good looking, they tend to have better Fibonacci ratios on their face. How true that is, right? I have no idea. So anyway, right, you can see that Fibonacci pretty much, right, works around us in nature. And that's where, traders start to think, hey, why not, apply to the financial markets, right? So this is where things kind of stop making sense for me. So I have thought about it, and why should Fibonacci work in the financial markets? So there are a few things with this, right? Is number one, there are many Fibonacci ratios, the 236, the 382, the 618, even the 786. So how do you make this work in the financial markets? Are we like, I know we are all humans, right? Maybe there's certain gene or DNA in us where the price comes to the 618 level, my finger can't help but to, click the buy button. It has to click buy. Maybe if that happens, right, to all of us, then hey, Fibonacci could work. Maybe there's a weird gene in us that makes us click buy whenever the 618 level is reached. But I don't think that's the case. I can pretty much buy anytime I want, not just at 618, right? I can prove it to you if you wanna see that. So yeah, I just can't find a logic to this. So this is the first thing that I face, right? Second thing is this. Which ratio do you pay attention to? As you've seen earlier, right, there is actually 3 ratios that you can look at: 236, 382, and 618. In fact, there is even more, right? Even 786, 886 if you want to go into the finer details, but let's just keep this to these 3 numbers. Which ratio do you pay attention to? The 236, the 382, or the 618? So let me just share with you an example. So let's see, all right? Okay. So you can see over here, right? This is the chart of Nasdaq, right? If I'm going to pull out the Fib retracement tool, you can see that if I pull out from this swing low to this swing high, that's usually how it's drawn. And you'll tell me, hey, Rayner, look at this. Look at this, right? The price. Bounce off the 618 level. Fibonacci works, right? Told you, you're wrong, Rayner. Right? So, okay. So here's the thing, right? At this point in time, right? Do you have any idea that it's going to bounce off the 618? No, right? It's only after the fact that it's easy to tell that, it bounced off the 618. In fact, if I can just do this again, right? Let's say if I just, how about I draw from here to here? Boom. Oh, hey, Rayner, look, you're wrong again. It bounced off the 786 level. Well, that's because it happened after the fact. Okay, so this is the problem, right? How do you know that when you draw this Fib retracement tool, like say for example ahead of time, right, from the swing low to the swing high, how do you know which level it's going to respect? The 236, the 382, 618, 786. Which level? In fact, it's such a huge area, it can pretty much bounce off, anywhere within the area, right? Not at a specific Fibonacci level. So this is the first thing that you have to kind of figure it out on your own, right? Which ratios do you want to pay attention to? So this is something that I could not come up with a perfect answer for, but something that you can consider is number one, you can, use a confluence of support resistance overlay with it, right? So you know which specific Fibonacci ratios to pay attention to. Number two, you can use tools like, reversal candlestick patterns, right? So if the market forms a reversal pattern at a certain Fib level, right, that's can serve as a confirmation that the market could possibly reverse higher. So these are two things that you can consider, right? Especially if you do not know which Fibonacci ratio tool, or rather which Fibonacci ratio number, right, you need to pay attention to. Okay, now, moving on. Which swing point do you use, right? So on your chart, there are so many swing points. Which swing points do you want to draw your Fibonacci tool from? So again, an example. You can see over here, there are many swing points. I can draw it from here, this extreme low to this extreme high. I can draw from this low, I can draw from this low, this, and this. Which one do I use, right? There is, from what I've seen, right, there really isn't a perfect answer to it. Most traders draw it from the extreme level. Some draw it from the most recent swing low, right? But hey, why can't you draw it from the middle of the range, the middle swing low between this entire range? Maybe this or this, right? Maybe you can even get a swing low that is closest to the 618 Fibonacci level, right? Overlap, right? Fibonacci come Fibonacci, right? Why not? So you can see that there is a lot of subjectivity to the way you're going to draw your, or rather to know which swing low you want to draw from. And on top of it, right, you can actually sort of make the market show you what you want to see. For example, right, if I'm going to draw from this swing low, this Fib retracement from this swing low to this swing high, at this point in time, the market didn't really respect any Fibonacci number, right? So what you can do is you can adjust it up higher. At this point, again, nothing. Okay. At this point, boom, all right? Hey, the market, right, bounce off the 236 level. Okay. Or if you want it to retrace deeper, just draw it up higher. Boom, the market retraced to 382. If you want a deeper retracement, draw it up from a higher swing low. Boom, 786. So you can see that you can pretty much make the market, or rather manipulate the charts in such a way where it can respect any Fibonacci ratios that you want, depending where you draw your swing low. So again, this is all subjectivity. It all depends on you, the trader. So this is something that, again, you really have to be careful about, right? The way you draw your Fib tools. So be aware of it, right? And just a suggestion, right? If you really want to draw your Fib tools, to me, it makes sense that if you want to be consistent, draw it from the extreme low or the most recent swing low. That would have the highest chance of giving you the greatest consistency when you are drawing this tool. Okay? And finally, is Fibonacci useless then? Since, I've so many not good things to say about it. Lack of logic. Which ratios do you pay attention to? Which swing points do you use? So does Fibonacci, does it mean that Fibonacci is useless? Well, not quite. I would say if there is one thing that is useful, it's useful for the Fibonacci extension, right? The tool called Fibonacci extension. So let me explain, right? So how this is useful is that, in a trending market, okay, the market tends to make new highs, and it tends to exceed the high by a certain margin before it retraces lower. For example, this one, right? The market exceeds this high over here, exceeds, and then it retraces. This one over here, this move exceeds this high, and then it retraces. So if you're a trend trader and you want to capture a swing in the market, you do not necessarily want to just exit at the previous high, because you know that there is a good chance the market would exceed the high by a certain margin, and there is a potential profit potential that you can still capture. So how do you kind of define this margin over here? So this is where the Fibonacci extension tool is useful, right? So let me just get it out. This one over here. Okay, so let me just draw from here to here first to explain to you how these numbers work. So you can see over here, there are a few numbers here. Okay, this is the 1272 here. Okay, so how this number come about is, let's say the distance here is, let's say, 100 points. Okay, so you just take 100 points multiplied by 1.272, you're going to get this level over here, which is essentially 127.2. Okay, in this case it isn't, I'm just giving a hypothetical example. So that's how you got this level over here. So if you get the 16, there's another one called the 1618, right? You can see over here 1618. So what you'll do is just take this whole range, multiply by 1.618, and you get this price projection over here. Okay, so this is how the number come about, and this is useful because you can actually project, right, price projection where the market could potentially find resistance, in this case in an uptrend. So what you'll do is, let's say for example, you're long on this pullback over here, but again, you know that the price would exceed these highs by a certain margin. You do not know how much. So just draw your Fib extension tool from swing low to swing high. Okay, and back to this swing low. And you can see that this market pretty much found a bit of selling pressure at this 1272 level before it retraced down lower. Right, so this is again could be a potential take profit level that you can use to exit your trade. So again, we can do another example over here. Let's say this one over here. Okay, we draw from this recent swing low to this recent swing high and down again. So again, if you were to go long, or if you're already long, this over here, this 7805 level, again could be a potential level where sellers could be, and could be a level for you to take profit, right? To maximize your profit potential instead of, I almost say potential. Maximize your profit potential, right? Instead of just looking to exit at these highs. Or even you can take half at the swing high and the remaining half at this 1272 level. That is possible as well. So this is where I find Fibonacci extension is useful, right? If you are trading with the trend. Also, another thing that I would say is useful even in a range market, right? When the price breaks out of the range. Let me just find an example. So you can see over here, this Euro New Zealand, it's in a range again. So let's say, for example, you're a breakout traders and you want to trade the breakout of the range. How much further could price go? This is where Fib extension tool can be useful as well. Again, same logic, just draw it from the swing low to the swing high. Okay, and back to this swing low again. Okay, this swing low to swing high and back to this swing low again, this swing low. Okay, so again, you can use and see where the price projection, right? So this one over here, 127, and this is the 1618. So you can see that this 127 had a bit of selling pressure as well, and it has a confluence of this area of resistance. So again, if you want to trade breakouts, you're a swing trader, this is a possible level that you could exit partial trade. And then if you want to ride the move, right, this 1618 again found a bit of selling pressure before the price had a decline. Again, another further target profits that you can consider. So this is where I would say the Fib extension tool is useful for swing traders if they just want to, capture a swing in the market. Okay, so not all is bad about Fibonacci, even though I have my issues with it, right? But I hope I do share with you practical techniques that you can use, and also to make you think deeper about the tools that you're using. I don't want you to just blindly use the tools, the technical analysis tools out there because the textbook says so, right? You have to always think on your own. No one is going to do that for you. So just a quick recap. Number one, Fibonacci, to me, I find that there is no logic to it applied to the financial markets, right? I can click, right, at any level, not just the 618, right? I'm not sure about you, but for me, I can control by my fingers. The ratios to you, right, is the ratios that you want to use it's up to you. 236, 382, 618, 786. I do not know, right? But what I did share is that if you have trouble deciding which ratios to pay attention to, use it confluence with, support resistance, moving average, trend lines, or, even candlestick patterns that could help you nail down the ratios to pay attention to. Third thing is that you want to be aware of the swing points that you want to draw from. The extreme low, the recent low, the middle of the range, I do not know. Hey, that rhymes, right? The swing low, the recent low, the middle of the range, I do not know. It's all up to you, and you want to be consistent with whatever approach that you choose to go with. And finally, I personally find that Fibonacci extension is useful for trade exits, right? If you're a swing trader, right, you can use it in a trending market or when the market just broke out of the range. Okay, so with that said, I've come towards the end of this video. If you have enjoyed this video, right, hit the thumbs up button. Okay, subscribe to my YouTube channel so you'll always be up to date. And with that said, I wish you good luck and good trading, and I'll talk to you soon.